Good morning. After this weekend post FOMC, we can make some little updates. Not a lot change, of course. So I start with this chart because it's the big view, and I like always to start with the monthly or the weekly view. So we have this big trend line that we broke a little bit. Some call that a phase breakout. It depends on which time frame we look at it, of course. If we look at it on a weekly, like there, you see we only spike above it very slightly, nothing big, nothing to call a phase breakout, just a spike above. We came back here and now we are trying to go again there. So I would not be surprised that this area, of course, will be important. We will probably arrive there mostly with a double bottom of this high here. So if we take that high, it's a little bit big. If we take that high, we can see that it would be aligning more or less with the area where we would land on the first retest of this trend line. The big difference is the momentum we have. I mean, this big weekly candle, one of the biggest we have seen since March 2020 with the COVID push. So it's a very big candle. We are pulling back as expected now. That's what we said on Friday. So it's normal after such a move. So now we will look where we can reload and where we can jump in on the long side, which is the side we have been looking for the last 3 weeks. So now let me just refresh some fib things because it's important as we know. So where are we now? Always keep that in mind on the daily basis. So we have been bouncing on the 38.2 fib here. So in a big swing like that, the trend was down. We went up to the 61.8. We could not break the 61.8, meaning here the trend up is dead and the previous trend is still alive, this one. So we are still inside a kind of flag, a big weekly flag where we have been inside. We could not break the 61.8. We went back to the 50%. Now we should see a bounce up to probably this 50% or a little bit lower. I will show you on some fib later with the 38.2 fib, which is at 94.45. So it will be tricky when we will arrive in this area. It means we would break above this trend line a little bit more, probably pull back on this 50% fib and then resume lower. That would be the logical thing. Or perhaps we will not break it, we will come back and bounce and come back and bounce up to this area, never really break above this trend line up there, and then we would resume lower. That's the longer term view. So this 38.2 has been very important and this fib has provided a good support and resistance area. Now we go to the next big fib we are looking at, and that's what we have been looking on Friday for this potential pullback. Let me put that on a daily basis. So we have been looking at this 23.6 fib. We stopped to the pip on it, which is very nice. Now we will come back soon on this 21.4. So we need to be very look at that very closely, because even this 21.4 here could give a bounce to the USD, and if it's not here, it will be a little bit lower on the next fib we will look at. So the first level to start being long USD or try to be long USD would be probably in the 92.11 area. If we look on the other chart we have for that, because it's important to look at it, if we look here, we have this level here at 91.96, sorry, which has been a place where we have been holding a little on the way up. So this green level that will come soon, this green level is important because it could be there. So we have 91.99 up to 92.11 if we look at the two charts. That would be the first area where we would look for a pullback, and that's what we have draw on Friday. I think we can go a little bit lower. I think we should break this one, come back in this area, and try probably at least to go to the 38.2 of the move up. So let's look at the fib only on this move up. If we take this move up, so you see we have the 1140, but we should see at least this area with the 2140, 2360. So I will draw it here again as a potential area for a bounce. And if not, we could go till there. That would be a very good thing, because look at the support we have there. That's on a daily basis. So it's a very big support here, and that would be a great place to get long if we would have the chance to go so low. That will depend on the that will depend on the data we have this week and what movers we could find to do something like that. So this is the 38.2 area. I will put it like this, and this is the sorry. This is the 2364, 2360 slash 2140. So that's the area. I need to put it smaller, otherwise we won't see it on the rectangle when we will go in smaller time frame. Okay, so we have now our levels of inside this move, and we will look soon at the level of this swing down. So let me take off this fib now, and we look at the next one. That's what we did last Friday. We did all these reviews. So that's the swing up. We stopped right to the pip here. We went a little bit further this trend line, and we came back inside. So that's why this swing is important, and that would give us here the 50% of the move up. So I will put all those levels because that will give us an important roadmap, and that's something we need to have. Otherwise, we cannot know when we arrive in those areas. We don't know what to do, and we are looking for let me put it green like this. And of course, I put the explication, which is the 50% of the move down, this swing down, okay? So that's create our roadmap for the week and the places where we can look for, I will put it smaller, it's too big, and the places where we can look for a bounce. So we have this first area, we have this second area here, the third area here. So it creates for us the interesting support and resistances to be long. So now let's go to the next fib as we did on Friday. We will hide this one, go to the next one. The next one was measuring this move up. So we stop here to the pip. We have seen we have here another fib, which is the 38.2 of this move up. So you see we have here creating a big confluence. We have another fib, which is the 38.2 of this move up. So I will put this one too, like that. When we will arrive here, we will know we have something important there. We have a confluence there. So I will put this one on the bottom. Okay, 38.2 here. Great. A little bit bigger, a bottom center now. I'll put it on the left. Okay, so we have this one here, okay? So that's interesting. And if we go lower to this one, the 38.2, we have there the 50% of this move that creates another confluence. And we will see that for sure. We will see here some green and black level that we will have, and that will increase the confluence size, if I could say that. So I lock those levels so they won't move when we will go through the chart, even if it's in a speedway. So we have everything getting ready here. So we go ahead now. We hide this one, and we had the last one was that that fib, which was this move down. So this one doesn't look to be really interesting for now, even if it is the most accurate one. Let me check on the smaller time frame what we have. So we already stop on the big 23.6, so we will probably be blocked a little bit here, but we already stop on the big 23.6 fib of the black level that we already saw. I will lock them too. Okay, it is locked. So for now, you see here, this fib has been working there. This fib has been working. We have here the 61.8 that create a little bit more confluences in this area. And we have here the 50% that could increase some area of this move here. So let's perhaps put it like this. I prefer like this, and put here another reference to this 50%. I will put it blue and 50%. Okay. So now, if we hide all our fibs and we look at the level, we have created a kind of roadmap. Why is this fib still there? Okay, it's because it's here. Boom. Okay, so now we're ready. We have the 21.4, the 23.6 here, so we know we have this area. Then we have this 50% of the move down. Then we have the other big area here and the 38.2 there. So this one is the 38.2 and this one is the 50%. And we perhaps just reduce that one so we can see it better. Okay. Lock and the 50%. Okay, just under this thing. Lock. Okay, so now it's clear, it's nice, and we know where we go. So I look for a pullback. I said this area will probably give a bounce. We will perhaps come back, retest this 23.6 to the pip. We went a little bit lower, but that's data fib makes a difference. And the ideal scenario would be we would get up to the 38.2 fib here, or the 50% if we see it. I adopt it, honestly. I adopt looking at the big move we have and this big daily candle in a row. I think the momentum will stay strong. There is another thing we must look at, which is usually important, is this. So I just add it here, is the 50% of the daily body. And you see it's funny. So we know we have here the 50% of the daily body here, of the last daily body, which is just on the 21 for fib. So I would really expect something here, and we will probably have to look if we have a setup at this level. Let me look now, or we are from the setup point of view. We had some 15% setups, but we can see that on the other chart. And if we look at the other chart, we see we have this green level here plus the fib at 92.11, 92 something. So it would be between there and there that we would have between here and there that we would have a first reaction. And for that, we need to see on the 15-minute some long setup. So we have it already there. You see, we have the first setup. So we will be waiting gently till we get this 92 level. Let's say the 92, between 92.11 and 92. That's what will give us the best area. So I will change it here because now we have the double information. So we can put this one here and the 92 there would be more or less that's something like that. Okay. So what do we see when we do that? We see we have this area now, which is the next area where we will look for a bounce. And if we spike up to there, we will not be scared because we know we have the 50%. Anyway, at a certain time, we have to take decision and hold on a direction or the other. So we need to break this little support here. We should break it easily soon, I think. And then we would go a little bit lower, perhaps the 38.2, as we said. This one, yes, I will move it again because it's too big when you look at the small time frame. So this 38.2, which is there, let me lock it. I will replace them. I will place them again perfectly after doing the video for me because I like them to be perfect. So that's what we look for, this first area, then we will have this area, and then we would have that area, which will be the last area where we would look for a bounce. From the data point of view this week, we need to see what we have, what could be the catalyzer that would give us something. So today we have at 4:15 ECB President Lagarde speaking, which can be a mover on the euro, of course. Then we have Powell's testifying on Tuesday. Many euro data on Wednesday. For the USD, we have the flash PMI and the service PMI on Wednesday too. And then we have cable and USD data. So we have data more or less every day in different things. But even if euro is moving, it will move DXY, and then that will create something on the USD. So that will change the USD. So we have several places where we can see some move on the DXY, sorry. Now, to finish with the DXY, I will go back on the level chart that we are using. So we see those levels. That's something we need to take in consideration always because they give us confluences with the fib, and that create the big area we look for. Ideally, if we would be in a perfect scenario, the thing would be we will try that area we said, which is the 21.4 confluence area. And then the second thing would be in this area, probably that would be very, very, very good. If we don't see lower, I don't think we will go lower than that, but I can be wrong, of course. So if we go lower, we would go back to retest this thing that has been holding a lot of time here. But that would be really great to get long. I adopted looking at the momentum we had on the last 2 or 3 days and that big weekly candle we had. So this area will be the first. This one would be the second area, and we mix that with the other information we have. So if you will look at the other chart, this is where we have the 38.2. This is where we have some confluences of other fib. So this area would be very, very good. And here we have what we know already, the 21.4 coming soon. Okay.